share offering exercise currently taking place. A lot of investors have been asking questions about fundamentals of these banks, why they should buy, why they shouldn't buy, what are the benefits, what are the processes of going through the application process. And of course, if we know that a few of these banks are already done with their recapitalization, most especially, I think Fidelity Bank is done and GT is also done. But Access and Zenith Bank share offerings are still ongoing, and a lot of other banks are warming up for this exercise. So true to our word as an investment firm, providing up-to-date market information to grow wealth in good time in an atmosphere of transparency. We do not want our clients, as well as the entire investing public, to suffer the same fate that befell them in 2007, 2008, also in 2006, 2007, when banks came out with share offerings as well. A lot happened during that regime. And of course, several things have changed in the way share offerings are done in the Nigerian capital markets, the processes, the procedures, and in terms of information and how we go about investing. A lot has changed, even from the regulatory standpoint. Several things have changed. So we want to bring our clients to speed, as well as the entire investing public, to guide them through this process such that they are well informed about how to go about the process, and of course their hard-earned money can be well invested in banks of their choice. And of course a lot more about this, as well as other information that is agitating our mind, will be unraveled during this exercise, during this webinar today. I encourage us, thank you so much for joining on. I encourage us to be very active and participate well. We have come up with a set of our analysts as well as advisory team to guide us through the process, to answer our questions, and whatever is boggling our mind, I can assure you we'll provide information to this to your delight. So please join us in the next 1 hour or so, and be rest assured we'll give you the best with respect to the ongoing commercial banks recapitalization. Thank you once again for joining us this afternoon.
Thank you very much, Saeed. Thank you. Today we have a fantastic lineup of experts, as already mentioned, who will be sharing their insights and knowledge on the topic under discussion. We have Praise Ihasekien, who is the head of the research team here at Meristem Securities. Praise, do you want to say hi? We have Victor Medeyadu, who is the equities trader, and we also have Matilda Adefalujo, who is the banking analyst here in Meristem. We encourage you to participate actively, ask questions, share your thoughts, and make the most of this interactive experience. We have a chat box where you can drop your questions as the session goes, and then we'll take all of that at the end of this session. Let's get this started and make it a valuable and engaging session for every one of us here today. Okay, so before we go ahead, I'll come to Victor, right? We've been seeing a lot about bank recapitalization. I mean, a number of people have bank accounts and they've been getting emails. Some people on their apps, they see things about buying shares. Some people don't know what shares are, right? So do you want to just give us a brief introduction to the stock market, highlighting what benefits are in it for investors that decide to buy shares of listed companies?
All right, Adeze, thank you very much for that introduction. And welcome, good welcome to everybody that's on the call this afternoon. Okay, like you said, shares is an ownership. They give you a right to own, a company. So share is an ownership right, to give ownership right basically in investing. So when you look at the Nigerian equities market, I want to say the market has evolved over the last 2 decades, and it has given investors right to invest, wisely. And again, we've seen a lot of improvement in the Nigerian equities market, which includes a lot of financial data record inclusion, and that has made trading in Nigerian shares very seamless. And you can make a very wise and informed decision in investing in the equities market. Again, we can look at and touch on the benefits of investing in the Nigerian stock market. Stock generally is one of the few assets that give you a potential to earn high returns. It's typical of that asset class. It can provide higher return over the long term. And basically, if we look at various asset classes like bonds, real estate, alternatives, and all those other asset classes, equities stand out in that in the long term, it gives you that potential for higher return. Again, we can also look at it from the point of diversification. So if you want to diversify your investment, you can equally consider investing in the stock market, because it also offers that stability over the long term, especially if you invest in some value asset stocks that can give you dividend income over the long period and also capital appreciation. Then again, we can also touch on the area of liquidity. I mean, a lot of investors are most times stuck in having to raise capital quickly from their investment. Some might have investment in real estate, and they might struggle for about a year or two to get value out of that, to liquidate that. But that's not the case for investing in stocks. It's for stocks within a short period of time. You can sell your assets and raise the required liquidity you need to meet your quick obligation. And again, lastly, where I'll stop now is that it gives you that opportunity to beat inflation. So we've seen what inflation has been over the last couple of months, and we could see that a lot of investors have been struggling to beat such inflation number, which has been running ahead of what returns of investors has been. But equity is one of the few asset classes that can give you the opportunity to beat the raging inflation we have in the country today. So all in all, equities offer a great opportunity for investors. And bringing it down to the recent capital raise we are seeing in the market now, I mean, banks could have raised capital in other forms, either by issuing debt, but CBN thought it fit to say that equities is the right way to go. And this is where the banks have to beam their searchlight by coming to the market by way of right issue or a public offering to raise this long-term capital. And this capital has sustainable capital that is going to help the bank to build their tier 1 capital, which is part of the requirement the CBN is looking at. So in this period, we believe the banks would maximize these returns, which of course equities holders are providing to them in the long term, and give good reward in the near future. Thank you.
Thank you very much, Victor. So Praise, I would come to you. Victor mentioned something about raising rights and offers. Do you want to share your insights on the difference between the two? What are rights and what are offers?
Thank you very much, Madezi. Well, the companies have the bank, the central bank has given this the commercial banks different ways by which they can raise they can raise this capital. First off, just to answer a question that is in the chat box, that somebody's asking what does recapitalize mean or something like that. So to the literal meaning of recapitalization is to increase the capital for a company or for a firm. In this case, the banks, right? The banks have different ways to increase capital. Either they do that through debt or they do that through equity. Like Victor mentioned, banks, this exercise that we're looking at is raising capital through equity, through coming to the market to say, okay, we need more investors to basically say we need more investors to invest in the company and trust us with your funds, and we will definitely provide value for you. So I mean, the ways of raising this equity capital, they can either decide to look at their existing investors to say, from the existing investors we already have? Do we want to give them more shares for in a ratio that they currently have? For instance, if they can look at their existing investors and say, okay, you currently have 2 shares, we'll give you an extra one at a particular price. That is called a rights issue, where the target of the capital raise is the existing investors that the company has at a particular date. So if I already had a stock for that company at a particular date, I will be entitled to getting more. I can take up my rights. It's just a right, it's not an obligation. I'm not obligated to do that, but I can decide to give the company more money and they give me extra shares in the proportion of what I already have. Then the other cases where we have the public offers, where the company decides to say, you know what, we don't only want to look at our existing investors, we also want to look outside to other investors that are also in the market to capture more people. So our existing investors can decide to buy, more people outside can definitely decide to buy. So that one is called a public offer, where the bank decides to, or the company raising, and in this case, the banks decides to throw it open to the entire public to say, everyone is invited, come and, get invested in a company, come and entrust us with your money, and then we will definitely make value for you with that money. So that's basic difference between the rights issue and a public offer.
Thank you very much, Praise. To our audience, please remember to drop your questions. I can see some questions already coming in on the chat box. At the end of the session, we'll be sure to address every question that has come in so far. So Matilda, I'll be coming to you now. Can you just share some banks or the banks that are presently in the market raising capital and your recommendation based on their performances so far?
Yeah, thank you very much for your question. So if you had asked me this like on Monday, I would have told you we had Fidelity, Access, GTCO, FCMB, Zenith. But currently, out of the 5 banks that came to the market, we have only, 2 of them have closed their offers. So we have just Access Core, which is closing today. We have FCMB in the market, and we have Zenith in the market. So, when you look at these banks fundamentally, they have, when it comes to fundamentals, operationalization, and all of that, they are, strong. When you look at a bank like Access Core that is closing today, it emerged as a holding company in March 2022 after, the reorganization of Access Bank into a holding company. And, looking at their numbers in terms of their asset size, in terms of even their strategies, Access Core is known for its inorganic growth strategy, their aggressive growth. For 2023 full year, they demonstrated like really, really impressive performance, and this has even been over time. But when we consider the impact of the revaluation that we saw last year, it's significantly boosted their earnings. Their assets based grew to about 2.08 trillion in 2023, and that's the highest in the banking sector. So a look at their different numbers. There's a wholesome trajectory for Access Core. In terms of value, looking at fundamental, historicals, and even our projection for the future, we expect that Access Bank will continue to edge on higher. We are looking at an upside potential, that is the chance for it to grow as much, by as much as 20 to 25% at the end of the year. Looking at a bank like FCMB, which is known as the bank for SMEs, they are very heavy when it comes to giving out loans to support SMEs, small and medium scale companies, enterprises, and they're different. They employ different strategies. That's what FCMB. In terms of automating their lending process for SMEs, and when it comes to the banking, the banking sector, the banking industry, there are different set of clients or set of customers, right? So FCMB has decided that its own niche is focusing or targeting its offerings towards small and medium scale enterprises. And for 2023 full year, they recorded a really impressive growth. Their gross earnings grew by about 83% to 516 billion. And this was driven by actual fundamentals. So we're not just saying, oh, because of the impact of the valuation that we saw last year, there was increase in both their funded, that's the interest income, and the non-interest income fund. There was also for interest income, it was boosted by higher interest income on loans. So they were able to take advantage of the interest rate environment that we saw last year. And also they were also able to transform non-interest income in terms of fees and commissions income and the likes, right? So when it comes to looking at their numbers operationally, last year's number alone was higher and higher than the 5-year average for the bank. And also when you look at their share price trajectory, it has risen from about 1 naira, 2 naira in 2019 to about 6 naira thereabout right now. So from a valuation perspective, we also expect the bank to continue to grow. And finally, we have Fidelity. Fidelity is poised to close sometime in September. Zenith Bank. So we're looking at Zenith Bank. Fidelity already closed, so I'll just move on to companies that are currently in the market. So Zenith Bank it priced itself as a big tier 1 bank, a leader in the banking sector. And when it comes to tier 1 capital base, when it comes to the profit before tax, they pride themselves as the market leader. And they're also trying to pivot or expand their retail banking business. So as a result of that, we expect that there will be a drive of their asset. We expect to see higher asset growth. We expect to also see that they will, be more effective in terms of reducing their funding costs, which would help them to increase or improve their overall performance. So we expect that for Zenith Bank, they are well positioned, especially with the fact that they have the highest tier 1 capital in the banking sector. Looking at their fundamental metrics, their numbers for gross earnings, they were able to grow their gross earnings to 2.13 trillion naira in 2023. Their operating income also grew. Their earnings per share they have the highest paid dividends, in the banking industry. So Zenith prides itself as that bank, trying to, I'll say that when they are trying to go toe to toe with Access, and the likes. So for share price trajectory too, they've also been able to deliver value to their investors, first in terms of dividend payments. Also, investors have been able to understand this, and they are responding with really, really positive investments or investor sentiment. It has grown their share price has grown from about 20 naira in 2019 to about 35. It's skirting between 35 and 40 naira. And like I said before, they have the highest dividend dividend payment in the banking sector. And we expect that, they would the stock still has room for growth, right? There we have an upside potential on Zenith Bank of about 30%. So we expect that where the share price currently is right now, there's still room for it to grow. So those are my recommendations.
Thank you very much, Matilda. So speaking to Access Bank actually extended their offer. So it's expected to close on the 23rd of August as against today, right? Your recommendation basically is we can as well, or investors can take up these rights and offers that are being advertised by the banks presently, right? However, there are some questions that come to the minds of investors, especially when they look at the price these banks are trading at in the secondary market and looking at the price that is being offered by the banks. So Victor, I'm going to come back to you again since you're the man behind the machine. What would you advise? What do you think about these prices, the price difference, the price in the secondary market and the price being issued to the public?
Yeah, well, I thank you for that, and we do receive a lot of questions around this particular, scenario. What I would say is, this case, this trading pattern was peculiar to Access Bank, and in my own view, I think the reason being that the right price, came at maybe a premium to about the 30-day or 40-day moving average of that stock. So that is why I think we see the market, trade at a discount to that offer price. But again, there's difference between, when we look at the stock market, there's difference between price and value. Price is what you pay, value is what you get. So in this case, Access Bank deemed it fit to say their share is valued, it's worth 1975. So whatever is trading in the market might not actually reflect the value of the stock, even though we ought to see some convergence at some point. But aside that, and then again, we could also look at the dilution ratio, which is 2 for 1. For every 2, you get 1. So that might also create a little bit of dilution for that, but that's specifically for Access. And we believe for every other company that did raise or came to the market, of GT, Fidelity, in the course of the offer, we did saw that the market price trade at or a little above the offer price. Then again, it's good to also understand that the market, we have 2 markets in this instance, the primary market and the secondary market. And if you want to, create an analogy around this, we could say the price you could get your dollar at the ironing window might be somewhat different from what you can get at the black market, a little bit of variation. So that doesn't still mean it's not the same USD, but the market you go to might create a little bit of difference in the price you get. So in this case, the primary market is where the offerings are, and that has increased the offer size of shares in the market within that period. While in the primary market is trading at a different price, and that is based off on investors' sentiments. People can choose to sell their price and their shares at a range or a particular price away from the offer price. So that's left for investors. But all in all, it just shows the new market dynamics. And we believe for other shares we are seeing in the market, for other offerings that are open, there's a bit of convergence in the offering price or the offer price or the right price, and then what is traded in the market. Prior to now, we see that, we most likely see a technical suspension in the secondary markets when these offers open. But in order to create a bit of efficiency in the market and also to create more liquidity during the course of having an offer open, the exchange deemed it fit to let the offer run side by side while the stock continue to trade normally. So it's what is a trend we saw, but I want to say it's not anything to be worried about. Again, the volume for investors that are looking to invest heavily or to buy a major stake in the bank, which cannot be get in the primary market, in the secondary market, of course, you have to look at the primary market. So if you're looking to buy maybe 2 billion, 3 billion units of shares, the primary market is where you can get such volume. So what the market is doing at that point in time is not a true reflection of where investors are trying to trade. I mean, in this case, and I mean the large investors. So it's a market dynamics, but with time, it's going to normalize.
Okay, thank you, Victor. So you're saying that what's your forecast basically? You think the prices would further reduce in the secondary market?
Yes, with more dilution, we could say in the short term, there will be a little bit of pullback on some share prices. But I believe these banks have, strong earnings to maintain an upward trend in prices. And if we do see the potential for growth in the banks, if earnings can grow, then prices would also adjust and follow suit. And also, we need to understand that Nigerian equities, Nigerian banks are one of the most underpriced, banks or shares in Africa. I mean, I think our research team could provide some context to that, but they trade at a very low PE to their peers. So there's still value in these companies, and they have a very strong potential for growth. And like Said said earlier when he was opening the call, the essence for this is to strengthen the banks to be able to support the $1 trillion economy, I think by the end of 2032. Yeah. So the banks will be well positioned for this. And if we dial our mind back to the last 3, 4, 5 years, we've seen consistent growth in earnings for these banks. PBT has been coming stronger and stronger over the years. We've been seeing consistent year-on-year growth. So taking away the systemic shock that we've seen from hiking interest rates, or maybe some policies pronouncement by the CBN that is keeping the banks in a very tight corner. We believe if those concerns are maybe addressed in the short term, most of these banks would see strong recovery in their share prices, and then I believe they will recover. Even though we see a slight pullback, there will be a recovery in the near term.
Okay, thank you very much, Victor. To our audience, I know we might need more recommendations, or you want to speak with an analyst. We'll drop our phone number and email address on the chat box, so you can always reach out to us if you need further recommendations based on the topic under discussion, or basically any information in the market. I'll be going to the Q&A box shortly to take a few questions. Okay, so Praise, this question is for you, speaking to Naira devaluation. So Mr. Chicks is saying that because of Naira devaluation, money invested in the stock market, in Nigeria stock markets, is basically in Naira. So even if share prices are increasing, they feel like they are going to be losing their funds. How are the banks going to tackle this issue?
Okay, I would like to actually mention that the CBN came up with this directive to recapitalize the banks based off a number of factors. One of them is the need to sustain a $1 trillion economy. Another is the impact of Naira devaluation on banks' capital. So the CBN has judged that banks are not able to compete favorably with other international banks in other countries, South Africa, with the current capital structure that they have in light of the Naira devaluation that we've seen in Nigeria. So this recapitalization is actually meant to strengthen their capital base, to be able to also in light of, of course, the devaluation that we are seeing, but also strengthen their capital base to be able to deliver more production activities in Nigeria, and thus increase their value in dollar terms. We also know that Nigeria as a country, one of the things that we really need to strengthen our exchange rates is that we need to become we need to be better with production, right? Production activities need to increase on every level, on the oil sector, in the manufacturing sector, and also the strengthening of the bank's capital. We definitely give them more ability to support production and production activities in Nigeria, and in that way, that would also have an effect on our currency value. Looking at it from two angles, in terms of the CBN is quite concerned about the fact that devaluation imports banks and their ability to, it hurts them in terms of them converting their capital base to USD when comparing to other banks in South Africa and other countries. But then the recapitalization exercise has been designed in such a way that it's strictly based on capital injections, which will help them to be able to increase and strengthen their ability to increase the loan sector in Nigeria, credit facilities in Nigeria, which should support productive activities and then help to support Naira devaluation and the Naira, the value of the Naira at the end of the day.
Thank you, Praise, for that response. I have another question here. I think this would go to Victor. This person is asking, what are the process to trade one's right?
Yes, thanks for that question. So for an investor to trade his or her right, number one, I mean, that means you already qualify for such right. And next you need to do is to approach your stockbroker like Meristem, will guide you in the process. That will involve you, taking those, the details of that right, I mean, what you qualify for to the registrar for noting. And as soon as that is done, the quantity of rights which you qualify for will be deposited to your CSCS account for trading. So we've done that for a lot of our clients, within this period. Some have traded such right, because when a right offer opens, you can do three things. You can take up your right, you can renounce it, or you can do nothing. But in this case, you choose to renounce and trade on your rights. You can equally help with that. And with that, you get some value from trading such right to another shareholder or a prospective shareholder in this case. So it's a very simple process, and it should be done within the period in which the offer is opened. So that for Fidelity has closed. I mean, there's no opportunity to do that, but currently we have access rights in the market, so investors have an opportunity to trade their rights on Access Bank, and I want to believe that for Access to is still open. So those two offerings can be traded on currently. Thank you.
Thank you, Victor. I have another question here. It says, is there really any advantage in taking up your rights by filling the offer form over buying on the floor when the prices are the same or less on the floor? I think you already answered this question. Okay, I have another question saying, what has changed since the last offer? I'm not sure that question is clear. Maybe you want to clarify that question, Mr. Makonju. Okay, how can equity hedge against inflation in an hyperinflationary economy like Nigeria? Praise, do you want to take that?
Okay, thank you for the question. That's a very interesting question, because we know that Nigeria's inflationary environment has been, very, very volatile. We'll be seeing significant movements happen. However, if you think about the returns that we've seen on the equities market also, for the first half of the year, the equities market closed at about 34%. It closed up by 34%. And last year we had almost 44% closing up. Then 2 years ago, we had the equities market closing up by about 50% at the end of the day. 2 years ago, the Nigerian equities market was the best performing market in the world. Last year, I think it was the second best performing market in the world. So we've had instances where we see the market consistently outperform the inflation numbers that we have in Nigeria. So when you think about it from that aspect, investing in the Nigerian equities market definitely gives you the edge to the edge against over inflation. I mean, the last inflationary rate we had at 34.19 is the highest we've had in 18 years, and we've had the markets. And some stocks have even done over 100%. Last year, we had some stocks doing returning over 100%. So that has helped us to cushion the impact of the inflationary effects that we had in Nigeria. So it's a very interesting question. But when you look at it in terms of the numbers, comparing the way inflation has been moving, we know that it's very volatile. But then the returns that we've been seeing from some of these stocks, and even the entire market as a whole, just feeds into the assertion and helps us to answer that question that yes, the equities markets can be a very significant inflation hedge.
Okay, thank you. Thank you, Praise. I have a number of participants raising their hands. Please, can you drop your questions in the chat, in the question and answer box, and then we'll take your questions accordingly. So someone is talking about Fitson. Fitson share price has been static for some days. Is this as a result of a corporate action? Praise.
Yeah, I was just actually typing an answer to that. I mean, beyond just the corporate action, you also need buying activities to happen on a stock, where there are investors that have, bid at the price, and then people that have said, okay, they want to sell at this price, offer price, and then there's a bid price, and where there's a match, of course, trades happen. So you can have days where there might be no matches on stocks. Usually happens like that, but it doesn't really mean that there's anything wrong with the company. It's just the action of investors at that particular time is maybe tilted towards other tickers. But then we'll definitely still see some buying activity on Fitson.
Thank you very much, Praise. I'm waiting to see if I can get further questions on the question and answer box. I know some questions have already been answered, but if you would like further recommendations, like I mentioned, please reach out to us via contact@meristemng.com. The email address will be included on the chat box, and then you can also reach out to us to speak with any of our advisors. Trying to see if we have more questions. Okay. Okay, Mr. Ejiofor, your question was already answered, speaking to the offer price and the price on the secondary market. Okay, Praise, let me come to you again. Someone says the rate of inflation, for example, is at 33% and my portfolio gained 23%. As an investor, this is worrisome. This being the case, what then is the advantage of buying equities? It brings us back to the previous question you answered, though. I don't know if you want to shed more light on this again.
I mean, even if the broad market is returning 30-something%, there are some particular stocks that will do better than others in those stocks, and that's why we always emphasize investing in fundamentally justified stocks, the stocks that in the long run, the stocks are always going to perform and give you good quality returns. We've looked at these companies, looked at in terms of their revenue, their performance, and we know that they would definitely, if they are going through a rough patch, and sometimes some companies do go through rough patches, but they will definitely, in terms of their operation, will definitely recover. So I don't really have a full idea of the stocks that you've invested in the portfolio, but if you're returning 23%, you might have a mix of some stocks that have done well, some stocks that have maybe not really performed well. But then as long as you've invested in fundamentally justified stocks, you would eventually have a portfolio that would give you a hedge against inflation. So that would be a right track. But then you need to look at the stocks that you're investing in and make sure that they are fundamentally justified stocks.
Which is where Meristem comes in. We help with recommendations based off on some analysis that we do on all of these companies and advise you on a weekly basis, just so that it just guides your investment decisions. We have a question. What happens if a bank undergoes IPO and does not meet up the required volume of sales of the shares? Victor, are you there? Okay, Praise, you can go ahead.
Okay.
Okay, no, Victor, you can carry.
All right. Yeah. So with that, it takes a bank or if any issuer comes to the market to raise capital, they need to be, I want to believe, above 50% subscription for such offer to be successful. So with this, the banks, most of what the banks have raised, so most of the outcome we've seen so far appears to be positive. But if a bank now fail to raise or to meet 50% of what it intends to raise in the market, we call or a term it failed out in the market. And with that, the bank or the entity can explore other options, to raise capital. But with the investment environment we have in Nigeria and the pedigree of the banks that come to the market, we want to believe most of them have that, capacity, to meet, the quality of numbers they're willing to raise. I put this aside. We've seen the banks trying to raise something north of 400 billion. I think GT Bank, Zenith Bank is also raising something within that region again. If we look at these banks' earning, we could also see that they have capacity to deliver this kind of capital raise they are looking out for. So in terms of capacity and in terms of competence or maybe earnings potential, the banks internally can generate that. Then looking out the market, they could also have, I believe they have the capacity to attract such investors to give them, to invest such amount of money in the banks. Just to point again, the banks coming to the market, we could say they are banks that have good pedigree, too big to fail banks that will support the Nigerian economy in the near term, in terms of, and I believe CBN is critically looking at the performance of such banks to ensure that they succeed, for the financial system also to succeed. So Zenith, GT, they are big brands. Access, UBA, Fidelity, a strong tier 2 bank, so they are names that we know are critical to the economy in terms of the banking space. And we believe investors also will want to do their best to make sure that they partake in this offering, which the banks are giving such opportunity. And if we also look again, this is an opportunity for people that want to have, invest in the bank. Banking license is what, the HNI, Ultra HNI, wish to have any day, anytime. So if the banks are coming out and say, come and have a piece of an opportunity to be a shareholder in a notable bank, then we know a lot of people would want to explore this avenue to own about 5, 10, 20% of the bank if possible. But with this, we believe most offers will be successful. The banks are in good position in terms of earnings, in terms of competence, in terms of quality to meet those numbers. Thank you.
Thank you very much, Victor. For people that joined in late, we're actually streaming live on YouTube. So have access to the recording. You can also check us out on YouTube at Meristem NG, and then you have access to this recording. Someone says, I have an account with another stockbroker. Do I need to open an account with Meristem to get the weekly recommendations? Yes, you have to open an account with Meristem Stockbrokers. It's one of our value-added service to our esteemed clients. So for you to have access to that report, you have to open an account with Meristem Stockbrokers Limited. Another question says, how do I know what shares to buy? And if a share is overpriced by any bank, there's a lot of information in the market and it can be confusing, right? This is another place where we come in as your stockbrokers. We don't just give recommendation based on hearsay. We run analysis, fundamental and technical analysis on all of these companies that are listed or that are trading on the Nigerian Exchange Limited, and we advise you based on the results from all of this analysis that has been done. I have an undergraduate who is just 3 months away from being 18. Can I still subscribe for shares while I'm still 18? Yes, of course, you can subscribe for shares while you are still 18. You might not have a BVN at the moment, but the BVN of your parent or sponsor can suffice for you. So yes, you can operate a stock trading account. They usually say the best time to start investing in equities is now. So it's a good time to start. Another question, how long does it take after registering a Meristem trading account to be approved and get a CHN number? And what is the procedure to transfer one stock portfolio from one broker to Meristem? Okay, and once you open an account with Meristem, it takes between 24 to 48 hours for a CSCS account to be created for you, which is the trading account, and then you can go ahead to start placing trades. To transfer your shares from one broker to Meristem is quite easy. You can just send us an email to contact@meristemng.com, and we'll provide you with all the requirements that you need. Okay, Praise, I'm going to come back to you. What is the impact of, sorry, that question just left. What is the impact of possible banks merger and acquisition on the stocks? What about the proposed windfall tax on bank share prices?
Okay, one of the things that CBN also allows the banks to do during this period is also to carry out mergers and acquisition. That's also a way that they're allowed to show off their capital base and raise these capitals. I mean, looking at the fact that if we see two strong banks coming together to form a stronger bank, that's definitely meaning they will have some synergy benefits. And while there is no of the listed stocks in the market, there is no information on any merger yet that between companies. But it's definitely a possibility. We don't know if all the companies would come out to any of the listed companies will come out to raise this, but it's definitely a possibility that can happen. But then, the financial performance of the two companies coming together will definitely tell a lot about the story on what the future of the company is going to be. And then, should there be any such information or merger coming across, definitely we are going to do our due diligence as Meristem and put out, reports on what we think about these companies and what we think the future prospects is and how is going to affect the price of the company going forward. But then the fundamental performance of the two companies merging and coming together will definitely tell the story of what should be expected in the future. I don't remember the second aspect of that question. There is another aspect.
Yeah, the other was about
the windfall tax.
Yeah.
Oh, yes. I mean, the windfall tax is basically a one-off tax that the government has liberty to implement in situations where they feel a particular sector has, benefited significantly from something that happened in the economy. And that's what we could see that happened with last year, some of manufacturing and other companies in other sectors, even telecommunication sectors, were recording losses due to exchange rate devaluation. But we saw a lot of the banks recording unrealized gains from FX, on their books. So the government decided, let us tax the realized gains and let us get revenue. But then, the fact that the tax is only on their realized gains. The difference between realized and unrealized gains is that the banks may be carrying these gains on their book, but they haven't actually sold those assets to be able to get the income. But then the tax is on the assets that they have actually sold to get the income on. So that dynamics is definitely coming into play. For banks that have actually sold these assets and realized their gains, they're going to be paying, as at now, the Senate is saying they should pay 70% of these gains as windfall tax. What we think this would impact is it will impact their tax effective tax. It doesn't really affect the company's operations because the company's operations is one of the main things that they use to drive the profitability. But what is going to affect is their effective tax rates, so that they may be paying higher effective tax rates this year compared to what they have paid last year. But then if you look at the fact that a lot of these companies are still going to record higher profitability this year, the effect of the higher effective tax rates, the effect of that may not be as significant. Looking at the fact that, first of all, like I said, it's just on the realized gains. A lot of the companies have not realized this gain, so the tax they are paying might not be so much, but then we would see effect of that on their effective tax stability. But then we know one of the sectors that is really resilient in the Nigerian economy and even economic landscape at large is the banking sector. The banking sector is a resilient sector that usually does well, whether there are down times or in the economy or not. So the banking sector is usually a very resilient sector that a lot of investors look to invest. So the windfall tax might, impact effective tax rates for this year, but then we don't see it beyond this year unless the government continues to do the windfall tax into the foreseeable future.
Thank you very much, Praise. Victor, someone says, can I trade a proportion of my rights issue in Access Bank? How do I go about it?
Of course, the clients can do that. Like I said earlier on, you can do a part renunciation of your right, and then you trade it. So it's very possible you own 1 million unit of shares of rights, you trade 500,000 and you take 500,000.
Thank you very much, Victor. Seeing if we have further questions from our audience. Can one buy shares in rights issues by installments till the closing date? Hi, Victor.
Well, I don't understand that question.
Can one buy shares in rights issue by installments till the closing date?
Okay, of course. Okay, maybe if you intend to buy a particular amount or you want to be remitting a particular amount till the end of the offer, fine, that's fantastic. You can, credit your account with us over the period of the offer, and before the offer closes, the cumulative amount will be used to subscribe for whatever you wish to subscribe for.
Okay, all right. Thank you very much, Victor. Seeing that we don't have further questions, it has been quite an engaging session. Would quickly take the closing remark by Tope Oludimu, the Head Investment Advisor, Meristem Stockbrokers Limited. Tope.
Good afternoon, everyone. And I want to appreciate everyone for joining this call. As our brand promises, and we are still committed to ensuring that you meet your investment objective. When you smile, we also smile. That's our philosophy to you. And we are here to uphold you. That's our essence of existence in Meristem. So please come on board with us. All that has been shared so far is not theory. We are ready to practicalize it and ensure that you have a good experience with Meristem Security and other subsidiaries, not only stockbrokers, but other subsidiaries. We have Meristem Wealth Management, we have Meristem Finance, we have Meristem Capital Limited, we have Meristem Family Office, and also Meristem Registrars and Probate Services. Thank you for spending time with us this afternoon. We hope you enjoy it, and we are here to welcome you on board. Thank you.
Ensure that funds are readily available in your stock account, as time is always of essence in equity investment. Today, I'll be taking you through how to fund your account and have them reflect instantly on the Meritrade app. To fund your account, click on the deposit icon on your dashboard, input the amount, then click on the deposit icon to submit. Voila, your account will be funded. Now, there are different options on how to fund your account. You can do it through your card, bank, or transfer. Today, I'm using my card. Next, I input my card details. I'm inputting my card details. Click on Pay. instantly, my account is funded. So for the withdrawal process, locate the withdraw icon on your dashboard and click on it. Then type in the amount you'd like to withdraw. Click on submit and your registered bank account will be credited.
Wondering how to place trades on Meritrade? Let's take a dive into the process of executing a successful trade. Start by logging in with your credentials into the Meritrade platform. Then click on the new order icon on your dashboard. Select your portfolio and the instrument type. Next, you select the order type, that is, whether you want to buy or sell. Search for the security you want to trade and then input your desired quantity. Once you have determined this, select your price type, which is either limit price or market price. Here is a little trade secret. Limit price gives you the right to decide the threshold or the maximum price you can buy or sell any security. However, market price option executes your trade at the prevailing market price. This brings us to the last option, which is the order term. Here, you select the duration you intend to make your order available in the market until it finds a perfect match. Remember, trading is like matchmaking, and at the end of the expiration term, the order gets cancelled automatically. Finally, click on the submit button. A breakdown of your trade order pops up for you to review your trade, and you can always go back to make any adjustments before clicking the final submission button for the trade to be successfully entered into the market. Easy, right? Have you heard about Meritrade, the first digital stock trading platform in Nigeria by Meristem Stockbrokers Limited? You can download Meritrade from Google Play Store or Apple Store. On Meritrade, you can trade stocks that are listed on the Nigerian Exchange Limited. Worried about what stocks to trade? We have stock recommendations on the app to guide your investment decisions. Your investments are safe with us because we are regulated by the Securities and Exchange Commission. Download Meritrade today and register.
The beauty of wealth lies in growing, preserving, and transferring it. Building wealth isn't only what you do for yourself, it's what you do for generations to come. And to pull that off, you need partners. Partners who understand that the assignment isn't just to grow your wealth, but to preserve it against the harsh storms of life and ensure it sees the light of day, ready to be transferred from generation to generation. So you see, the art of building wealth is all about growth, preservation, and transfer. And at Meristem, we have perfected that art.
Meristem, let's grow wealth for you.
One crucial factor when investing in the stock market is to ensure that funds are readily available in your stock account, as time is always of essence in equity investment. Today, I'll be taking you through how to fund your account and have them reflect instantly on the Meritrade app. To fund your account, click on the deposit icon on your dashboard, input the amount, then click on the deposit icon to submit. Voila, your account will be funded. Now, there are different options on how to fund your account. You can do it through your card, bank, or transfer. Today, I'm using my card. Next, I input my card details. I'm shooting my card details. Click on pay. And instantly, my account is funded. So for the withdrawal process, locate the withdraw icon on your dashboard and click on it. Then type in the amount you'd like to withdraw. Click on submit and your registered bank account will be credited.
Wondering how to place trades on Meritrade? Let's take a dive into the process of executing a successful trade. Start by logging in with your credentials into the Meritrade platform. Then click on the new order icon on your dashboard. Select your portfolio and the instrument type. Next, you select the order type, that is, whether you want to buy or sell. Search for the security you want to trade and then input your desired quantity. Once you have determined this, select your price type, which is either limit price or market price. Here is a little trade secret. Limit price gives you the right to decide the threshold or the maximum price you can buy or sell any security. However, market price option executes your trade at the prevailing market price. This brings us to the last option, which is the order term. Here, you select the duration you intend to make your order available in the market until it finds a perfect match. Remember, trading is like matchmaking, and at the end of the expiration term, the order gets cancelled automatically. Finally, click on the submit button. A breakdown of your trade order pops up for you to review your trade. And you can always go back to make any adjustments before clicking the final submission button for the trade to be successfully entered into the market. Easy, right? Have you heard about Meritrade, the first digital stock trading platform in Nigeria by Meristem Stockbrokers Limited? You can download Meritrade from Google Play Store or Apple Store. On Meritrade, you can trade stocks that are listed on the Nigerian Exchange Limited. Worried about what stocks to trade? We have stock recommendations on the app to guide your investment decisions. Your investments are safe with us because we are regulated by the Securities and Exchange Commission. Download Meritrade today and register.
The beauty of wealth lies in growing, preserving, and transferring it. Building wealth isn't only what you do for yourself, it's what you do. And to pull that off,